Him's House, episode 11. I'm Jonathan Stern. As always, I'm here with Lewis Stevens and Dr. H. Earnings season has arrived. Hims reports on November 4th after hours. That's a Monday. Coincidentally, that'll be the day before Election Day. And so today I want to do a full Q3 earnings preview. Lewis, do you want to set the stage for us?
Sure, Johnny. So I think I would preface with the idea that investors in HIMS, especially new investors, should brace themselves for volatility. HIMS earnings reports have been consistently controversial since the company went public in early 2021. And I think it's worth noting before we see the numbers for Q3 2024, which they themselves will be controversial. But it's worth noting that HIMS reported fantastic numbers in Q1 2021, Q2 2021, Q3, Q4 of 2021. It reported fantastic numbers in Q1, Q2, Q3, Q4 of 2022. It reported fantastic numbers in Q1, Q2, Q3, Q4 of 2023. And you see where I'm going with this. And during the period from January 2021 to essentially October of 2023, a year ago now exactly, this stock sold off in a relatively linear fashion. 2 years of the stock selling off in response to what amounted to great earnings. And the principal evidence that they were great earnings through that whole period, the principal evidence for that is the idea that HIMS has now generated free cash flow in 6 of its last 6 quarters and 7 out of its last 8, which demonstrates that in all of those periods, it was creating revenue that had profitable unit economics. It was creating revenue out of which a lot of those dollars have stuck around. So as we go into this earnings season, it's worth noting, number one, that HIMS has a tendency to report fantastic numbers in response to which the stock sells off. So don't let the immediate potential sell-off, frighten you. Though, we have to objectively analyze the numbers going forward, and we can talk about that. But the number one thing is, I think that, the stock doesn't always react logically, and there's a lot of different factors associated with whether the stock is going to go up or down on the day of earnings. And then the second thing I would say is, we just need to continue to monitor the bottom line, and we can talk more about the nuance there.
So basically, if you're looking for a dopamine hit of the stock rocketing 15, 20%, not realistic, or don't bet on it.
No, I think that's possible. I like that. I like the question. At the end of the day, I just want to, I think it's important to calibrate expectations. And HIMS has been a profound teacher of expectation calibration because, we've gotten such great reports and, had to wait years for those great reports to really be acknowledged.
So maybe let's do a quick recap of Q2 2024. In that quarter, HIMS reported $316 million of revenue. They reported that they had gotten to just under 1.9 million subscribers, adjusted EBITDA of $39 million. Now, the company guidance for this quarter is between 375 and 380 million. If you look to the HIMS House Discord, the homies are calling for a few more millions than that. Any thoughts on where the company might land in terms of revenue this quarter, Lewis, particularly given progress with GLP-1s? What would be a great quarter? What would be a disappointment? How should we be thinking about that?
Well, to answer this question, I do want to ask Dr. H what his experience has been, which, for the listeners, you really cannot get. For a company, I think there's, you can't get as much value as you can from, the value we create is really incredible. And that's largely in part due to Dr. H's boots on the ground experience. So I'm interested to hear his perspective, but in short, 375 to 380 million. Frankly, the number doesn't mean that much to me. As long as it doesn't come below that. If it comes in below that, Transmedic today is demonstrating what we should expect if the number comes in below consensus estimates. I think if it comes in below, it's going to be a difficult scene with the stock price. But I have my doubts that it will come in below, and I think my doubts are related to possibly what Dr. H has been experiencing. But Dr. H, how has the weight loss GLP-1 business been, and or just generally, what's your experience been like in the telehealth industry over the last 90 days?
I still feel it's been really booming. I'm not in HIMSS currently, but I still do a lot of GLP and weight management, telemedicine consults for other companies. And even with all the FDA stuff talking about, is it off the shortage list, is it on the shortage list, I have not seen any change in patient demand. I'm doing tons and tons and tons of consults, new and refills every single day. In the new white paper that HIMSS mentioned today or released today, I think there's a brief blurb about, they mentioned 10,000 current patients on a personalized GLP medication, which I don't know, that to me, I'm wondering if they're just reporting a lower number. I feel like it probably would be a little higher than that if they include non-personalized dosages. I honestly feel like the volume and the demand is definitely still there. So I would be very surprised if there wasn't some nice numbers to be reported on this earnings call.
And so what I would add there, or what I would add to this whole conversation is that is in a similar vein to my introductory thoughts. Just to give those that are unfamiliar with the thesis with HIMSS and Hers Health some perspective, HIMSS guided to when it went public via the Oaktree SPAC, right? HIMSS did not use a traditional IPO route. It didn't direct list. It didn't IPO. It went public via merging with a SPAC sponsored by the very reputable investment firm, Oaktree Capital. And so in that presentation, in that SPAC presentation, HIMSS delineated its revenue guidance for 2022 or for 2021 and 2022. There may have been also 2023, but if I remember correctly, it was just what they would generate in 2020, then 2021 and 2022. And they estimated something, their estimates, their projections were something like 50 to 70%, 75% of what they ultimately reported, which means that they underpromised and massively over-delivered, especially within the context of what the SPAC trend produced, i.e. there was many companies that guided to X revenue and they came up woefully short. HIMSS was far and away the exception in terms of delineating revenue guidance, projecting how much revenue they would generate in 2021, 2022, and massively over-delivering on their projections. And that has been a very unique facet of the thesis. I think we've talked about it in the past. But now looking at Q3 2024, they've guided to $377.5 million at the midpoint. So their range was 375 to 380. And looking at the last 4 quarters, they've beaten on average by about 3%. So 1.03 times 377.5. And I guess if we're following the trends that they've experienced over the last few quarters, they'll report revenue of about 390. My expectation is that they'll come in above 400 as a result of the GLP-1 business booming. And I also believe that guidance will be raised from probably another 100 million or something like that. And all of that, and I don't want us to get ahead of our skis, but I think all of that's informed by my introductory thoughts.
Have you seen any other companies do this so consistently, under promising, over delivering, like each and every single earnings report? It seems like this is now HIMSS's MO. Are there any other companies doing this? And what happens in the end ultimately?
What happens in the end ultimately?
SoFi continues to underpromise and overdeliver. The stock price has not benefited. We'll see if the lower interest rates going forward change that. But Anthony Noto's SoFi is certainly one that comes to mind.
I mean, there's definitely truth to that. And you and I, Johnny, talked about the great report that SoFi produced earlier today. Was it earlier today? Did it come out today?
Yeah, very early this morning. They always they they always do it in the morning.
Okay, so I think to answer your question, Dr. H, right now the companies that I see doing this are Hims, though Hims beats have, I believe, declined relative to where they were in 2021 and 2022, but they're still on average beating by about 3% as of the last year. Affirm is another company that is currently beating by like outrageous amounts, and Affirm is just Affirm. We could do a full podcast on the unique distribution strategy of Affirm, and the idea of a unique distribution strategy is a good segue into what I would ultimately say about Hims in response to your question. So I have seen this before, and it frankly does not always end well. The thing about business generally is, hyper growth can be unsustainable. There can actually be downsides to growing too quickly. And I think that, this can be seen in many other facets of life, like in fitness and weightlifting. If you try to accelerate your progressive overload, if you try to accelerate the amount that you can lift, there's a chance that you injure yourself and then all of a sudden you're reset, by quite a degree. And then you experience momentum to the downside, and then you have to fight against the momentum to the downside. It's like, oh, I lost all those gains and all of that stuff, whether it's running or weightlifting or whatever endeavor. And the same thing, certainly the case in business. I think, when momentum starts going against you, it's quite difficult to pull up on the plane, get the trajectory right, so to speak. And I think I'm not too familiar with the Under Armour experience, but Under Armour, ultimately, the stock did implode. And if I remember correctly, because I have read about it, but this is just broadly related to the retail industry. In the case of Under Armour, it was a case of they tried to grow too quickly, and ultimately that diluted the brand, and the stock has suffered, and it's been really hard to rebuild. And that is certainly the case. Whether that was the case for Under Armour or not, I'm 99% sure it was. That's certainly the case for a business like Lululemon or Nike or any clothing business, right? Growing too fast can result in really bad outcomes. And so for Hims, we've talked about it on past podcasts. My perception has been that the business has been focused on methodical growth. And right, we discussed in the past that Hims could have launched weight loss in 2023. Hims it likely could have already launched testosterone. It could have launched weight loss in 2022 and testosterone in 2022. But that would have, I think, created unsustainable growth, or just growth where they experience, 70% growth, and then next year they're experiencing 5%. And then that just creates really difficult business dynamics in terms of the psychology of the culture. And everyone's like, why are we growing 100% now? Why are we experiencing negative growth? And why is the stock price going from, astronomical amounts, up 40% on earnings because we're growing too fast, to, stock price falling 50% because we grew too fast and weren't methodical with our product roadmap and all of that. I have more to share, but I'm going to stop here and see.
It's great. Related to the question of which product announcement may come next, is that the sort of thing that Hims will announce during an earnings report? Does it come at other intervals? Like in the past, when has Hims launched or announced that they would be launching new products? This is something that we've chatted about 2 or 3 times specifically on the podcast: menopause, testosterone, and so forth. When would we expect that announcement to come?
Dr. H, do you have any insight here? I guess, Dr. H, I would ask, before I share my perspective, I think, or just what my account of the objective reality, I don't think it's really a subjective question, but Dr. H, would they announce to you like, hey, you're a physician on this platform, whether, whatever platform you might be working on at the time, will they come down and say, hey, here's the product that we're going to launch, or what's that look like?
In the past, when I was on the platform, they would briefly mention like a general roadmap, and it would be somewhat along the same timeline as an earning call when the general public would get a whiff of it. And I think on the previous earnings calls, they would have a roadmap and they would show, general categories of whether they're looking to expand to, but nothing very specific for, for example, hormonal therapy. They might not say specifically, we're going to do specifically menopause with vaginal estrogen and oral hormones and stuff like that. So they're not very specific, but it doesn't come out until when the actual treatments are made public to the public. The physicians will get a notice about it maybe a month or two beforehand, so that we can get trained on the new medicines and the new workflow and stuff like that. So they'll do that, and HIMSS typically also will roll out the new treatments to certain states first. So they in the past haven't done a widespread whole country rollout. They will do certain 5 states here, 10 states there, and then the whole announcement to the public is made, like, oh, it's available now through most of the United States, 50 states. So it's kind of along timelines with when they kind of make hints at it in the earnings calls, but there's not anything we don't know way in advance or anything like that.
That's interesting. My recollection, because I don't, in terms of the timing of the announcements, frankly, I don't know how important the actual timing is. I think in stock investing, there's so much information. And it can be difficult to identify what really matters. And as an aside for those listening, ultimately any investment thesis can be 3 to 5 sentences, and those 3 to 5 sentences will inform why and to what degree free cash flow per share will grow. And same could be said for HIMSS, right? Ultimately, could all be distilled down to that. But the number one thing that I would say, the most important element, is that they will continue to launch new products, and that there are visible products on the roadmap, and that they are doing so in a methodical way that creates relatively smooth growth. I think that's the most important aspect of the multi-product platform strategy. And I think just generally that HIMSS operating a multi-product platform strategy is very important. And that relates to the durability of growth, that relates to the durability of cash flows. It relates to just the overall risk of the business. And we can talk about, that. I think we'll talk about that in future podcasts, because that's a whole topic to consider.
Louis, just to piggyback on the idea and theme of boiling something down to 3 to 5 sentences, the most important thing. If you had to single out one thing to keep an eye on for this Q3 earnings report, what would it be? What makes or breaks earnings for HIMSS on November 4th?
Yeah, I mean, it's too easy. It's ultimately how many customers are they acquiring, and how much are they acquiring those customers for? That is the essence of the thesis. And why is that the essence of the thesis? Very tangibly to the listener.
And Louis, I want to be really specific here. You're saying that's the single most important thing for where the stock price goes on Tuesday, November 5th, or you're saying that's the greatest indicator for where HIMSS will be in 2 years and in 3 years and on?
I think it's both. I do think that the algorithms, I think Wall Street has figured out that the whole thesis is what's the net present value of each customer, and how well can we identify what that is. And so ultimately, what's the value of any business, right? Why is the number of customers acquired at a certain amount an important idea? The value of any business is the net present value of the cash flows it will produce, right? Ultimately, we're buying a business to extract cash, which is energy, from it. We have an outlay of cash, an outlay of energy, and that is supposed to generate future energy, income, cash. And so with HIMSS, the value of the business can be distilled, it can be calculated in some sense by looking at this. Well, it's any business, right? What's the net present value of a customer of a pizza shop? Right? If you have to spend, $1 million in advertising to capture one customer for your pizza shop, that initial outlay of capital is a deep red. You're deep in the red with that $1 million to acquire that customer. And how many pizzas will that person have to buy? And Are they going to stay loyal to your pizza shop when there's, 20 pizza shops nearby? The value would be a lot. In that case, any investor would say it costs $1 million to acquire one customer, and what are you generating? What's the customer lifetime value here? It's like $1,000 over 10 years. Obviously, the math doesn't make sense. So that's an extreme example of what really matters for HIMSS. The question is, can they continue to acquire customers in such a way that that initial outlay of capital, how much they go into the red, justifies the future, or justifies that investment. The future cash flows that they generate justify that initial going into the red, right? So that's the number one thing for the thesis now is how many customers are they acquiring and at what cost?
And so in all of that, I didn't hear the 3 letters and number GLP-1. I mean, it's certainly influencing that more abstract idea, Lewis. Are you not listening for 1 or 2 things related specifically to the weight loss?
I mean, no. I don't think that and this is actually the number one thing I wanted to bring up going into this video, is that for the listeners, it's like, step back from the ledge. I think some of the Discord community can be funny in the sense that they're like, if the stock price doesn't do this today, then, what's going to happen? And it's like, I think a lot of people are checking their stocks throughout the day and all this stuff. I frankly don't recommend it. I think the community of Discord is fantastic, but it's like, relax. Just step away from the ledge. What really matters? What matters is how many customers they're acquiring and at what cost. And that, there may be one quarter in the future where that number it goes from 750 on average to 5,000, and it turns out that they cannot acquire customers profitably. The customers that they acquire are just too expensive, and ultimately the economics of the business are slightly impaired. I don't believe that will happen, but that is, ultimately the worst case scenario for the stock. But generally, my mindset is like, this isn't the make or break quarter. I think there's going to be, it's going to take a while before we're at a quarter where it's like, nail biter, can they continue to grow? And what do I mean by this? A good example is Netflix in early 2022, when customers came in flat or they declined from Q1 to Q2. And you could see just the outrageous panic associated with the stock, or the stock, investors started selling off the stock because, oh no, growth has evaporated, and now they can't continue to acquire customers, but now subsequently we found out that they could. So I think we're a long ways away from that. I think GLP-1s, if anything, in some sense, the fact that GLP-1s are going to take a little bit longer to really fully come to market in a way that makes sense, in a way where there's no Novo Nordisk or Eli Lilly threatening lawsuits or whatever, in line with what I've been saying, which is they have a product roadmap. They're very methodical about it. In some sense, it wouldn't be the worst thing for GLP-1s to roll out over a 5 to 7 year period. Is the stock going to go to 100 in a year because GLP-1s are fully on the platform? Maybe not, but I just don't think I don't think GLP-1s are the thesis, number one. And number two, I think just looking at HIMSS as this methodical multi-product platform that plays out over years or over a decade is a far healthier way to look at it.
Dr. H, from your perspective, the physician's perspective, what are you most excited to hear about?
Like many of the investors and Discord members, I do want to know what are their next treatment offerings they're going to roll out. Is it hormonal therapy, which I've been kind of beating a drum on, saying, hey, menopause care is going to be huge. As a physician, I want to know what's next, and how is HIMSS going to do it in a way to provide great care and bring in customers off of this new treatment option. And I just want to see HIMSS continue their forward thinking and providing great care at a place where people can access that care. So from a medical standpoint, I want to see what's next. Everyone's excited about GLPs to the point where it's kind of like, okay, but yeah, new treatment options is what I'm looking forward to.
Are we expecting an update on the 503B facility that was just acquired in California? Any thoughts on that?
All right, I'll share Johnny, you could say, don't edit this. I'm just kidding. You're at this point, you're editing. I personally think the authenticity is valuable.
I'm just trying to give the listeners stuff to listen to during the call. That's all.
Yeah, I can share my perspective on the 503B. In my estimation, or I don't personally have a take on the revenue impact by the 503B pharmacy. I would be interested to read like Bernstein or Guggenheim or Wells Fargo's professional research on what's the significance of the 503B pharmacy from a unit economics perspective and from potential revenue generation. I think that the vertically integrating a 503B pharmacy is interesting. And on past podcasts, we've discussed the idea that these 503B pharmacies do big numbers. They generate a lot of revenue. So now,
and we know HIMSS is hiring. HIMSS has rolled out multiple hiring positions on its website, specifically in Los Alamitos. It's hiring for that pharmacy now.
Where's Los Alamitos? Is that Arizona?
That's in California, where the 503B pharmacy is.
Oh, Medicare. Okay.
Yeah.
So, for the listeners, I think one of the great values of this podcast and of this series is that we give you the so what, right? There's so much information associated with this podcast. So, why care about the 503B pharmacy? And the very objective reason you should care is that this represents further vertical integration of the HIMSS platform. And one of the most compelling investment setups that you can find in the market is when a business vertically integrates a product that in its former incarnation required a host of point solutions to execute. And that host of point solutions created an underwhelming consumer experience and ultimately made it more expensive, right? The consumer surplus in that point solution rife product, such as we've discussed in the past, the legacy taxi industry, the consumer surplus was just objectively lower. People paid more for a worse experience. And so why is it important? So what? HIMSS required a 503B pharmacy. And the short answer, the short and most impactful answer is that this represents the company further vertically integrating, and the vertical integration allows them to create a better consumer experience with better economics for both HIMSS and the consumer. Right? Ultimately, the consumer will receive greater consumer surplus, and HIMSS will be able to generate either better unit economics or they'll be able to grow faster. They can pass the savings related to the vertical integration onto the consumer via what they would call an investment in price, lowering prices, and that would result in faster growth. And on the other side of that, because HIMSS is a multi-product platform, they could upsell the customers that they acquire and increase the value of the customers through offering multiple products to them over time. So that is the so what of the 503B pharmacy acquisition.
I also want to see if they'll drop the little nuggets with your previous question to me, Jonathan, about what I'm looking forward to. I'm hoping to see if they'll leave little clues about what they're going to do with the 503B pharmacy. Everyone obviously jumps to and thinks about, oh, they got this new pharmacy, now they can do GLPs and all that. But as on our last episode with Sikander, Presidential 01 pharmacist, he showed, I'm going back to the menopause again, he showed 4 or 5 different things, you had vaginal estrogen, testosterone, some other stuff. Hey, is this 503B pharmacy now going to be able to combine these 4 different things into one new treatment modality for a new line of treatments? So I'm really hoping that there'll be some clues or tidbits that we can glean from that.
I definitely agree with Dr. H there. It'll be interesting to hear if they can, or if they choose to articulate what unique products they might create via having access to the 503B pharmacy. I can't remember if they communicated what personalization they would execute, what personalized products they would launch via the Apostrophe acquisition, which ultimately vertically integrated a 503A compounding pharmacy. But it would definitely be interesting to hear thoughts from management in the vein of what Dr. H shared.
We usually stay away from price projections on this podcast, but earnings are coming up. I think it would be fun to discuss specifics. I suppose you don't have to answer, but I'd be very curious. Where will Hims be noon of November 5th? What price per share noon of November 5th, the day after?
Lewis, you had a poll on your Twitter account before the last on your business Twitter account or X account, and you were like, what's it going to be? And it was like less than 10, 12, or greater than $14. Do you remember that one?
I do.
I personally answered less than 10 or whatever, and I told you it's only because I want to buy some good vibes over here and not like get too excited about it. And then the immediate reaction after that, it went the next 2 or 3 days, it went over like 14 to like 15 or 16 or something, right?
Is there a path to $30 by the end of the week? By the end of next week?
Do you want me to answer?
Yeah, I want you to answer.
My response would be as good as anybody's. We could go ask John Smith on the highway or on the street, and his answer would be as good as. Here, I'll actually share an answer. So, Hims generated 15% free cash flow margins in Q2 2024, 15.7%. There was a working capital dynamic that artificially increased their free cash flow in a quarter. So the realistic free cash flow margins, the true economic content of the business, it could be debated. But I'll say through a Wall Street mind, it was probably 10% in Q2 2024, and any further margin expansion is yet to be seen. So we'll go with 10%. Let's say that's their free cash flow margin for 2024. If they generate, let's say they guide for 1.5 billion total sales, so they're going to generate $150 million of free cash flow using 10% free cash flow margins in 2024. And if we say that should be valued at 40 times free cash flow because they're growing at 50%, probably should be valued higher, but let's just say 40 times. That is a $6 billion market cap, and there's 235 shares outstanding. So we're looking at $25 a share, 25 and a half. I think, and that is using 10% free cash flow margins. Keep in mind that management has guided for between 20 and 30% adjusted EBITDA margins. And in order to get to free cash flow from adjusted EBITDA, you have to subtract interest expense. Hims has no debt, so you're not going to subtract it, but technically you should. Taxes of about 25%. And depreciation and amortization. Hims is very asset light. Ultimately, depreciation and amortization is CapEx. And free cash flow is cash from ops less CapEx. So my point is that between 20 and 30% adjusted EBITDA margins, you can easily get a 15% free cash flow margin as your pull through long run free cash flow margin, which is how you should value a business, because ultimately you're just not going to be able to value it properly if you get the long-term margins wrong. But using 15%, I do think if the market can feel confident that 15% free cash flow margin, which is a base case free cash flow margin, if the market can feel confident in that based on specifically the cost to acquire a customer and ultimately what the net present value of that customer is, then I think over $30 a share is well within reach. I think at $25 a share, we're up like 500% from the lows last year. Or 400%. I don't know. We're at like $5 in October of 2023, and now we're at roughly 25. I don't take a lot of issue with Hims pricing at $25 a share. Do I think that it could go up a lot? Yes, but ultimately equities are risky, so risk equals return. So Hims should probably offer 25 to 30% annualized returns, and I think with its valuation a little bit depressed, it does offer that. And I'm going to stop. I'm going to stop because I'll start getting on academic finance stuff.
I'm not
I
really
think it's $30 a share.
I'm not so sure you gave me a number there, Lewis. But
I think it is $30 a share. That's
He
what
said it's possible 30 and up.
I just believe $30 a share.
I did hear that. Yeah. If things go, basically what I heard is that if the company keeps executing, it's a good report. There are ways to make the numbers work so that the company's fair value is 30 plus.
Exactly. And the big factors will be, number one, what's the cost to acquire a customer? Number two, what is the delta between gross margin and sales and marketing as a percent of revenue? And then what's guidance for growth? Those three factors will inform what the stock does over the next 6 months. I don't know I think it goes over $30 a share. That's my pick. I'm bullish on him, so I think the stock's going to 50. I don't know where it will go.
Dr. H, how do you want to follow that up?
I like the 50. If Lewis says it, I will go with it.
Well, again, HIMSS reports earnings next Monday after hours. We will be doing a live stream, headquarters for anything and everything related to HIMSS Q3 earnings is HIMSS House Discord. The chat will be there. We're yet to sort through all of the logistics, but if you join the Discord, all of the information will be there. This has been HIMSS House episode 11. Thank you very much. See you next time.